The following is a presentation of TFNN. The Bull Bear Nadex Options Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Bull Bear Nadex Options Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 137. You get the Nasdaq off 73, S&P's off 15. And, I just heard your update, Tom. I mean, this market didn't start off that bad, but went south pretty quick.
It's always interesting when you do the update and you got 5-minute bars that are expanding to a big either direction. And, yeah, to the downside, for sure.
So you get the composite right now down 0.9 of 1%. S&P's off 0.3, and the Dow Industrials are off 0.5%. This is it's quite a start.
Yeah.
Gold contract up $4.10, trading at $12.07 an ounce. We have silver up 5 cents, $14.72. Oil flat, $75.72. Notes and bonds, that's the story, man. Big numbers. You had, today, you follow through, you get the 10-year note down 6, 117.30, 30-year off a half a point, 138.02. You get King dollar down 51 ticks, 95.355. Now, there is divergence in a huge way. Bottom line is that we have the 10-year running out at 3.18. We hit 3.21, okay, which is
quite a number.
Go back to 2011, which is
yes.
2018.
It sure is.
2011.
Right? That's right.
Give me a break, man.
That's right.
And the dollar's not moving, so the divergences, we're going to see where they're going to figure out. And
quite a statement from Powell yesterday. Did you hear what he had to say in terms of, like, we're not even close to neutral and we might go past neutral? That was the gist of what he said, and that's a little bit spooky if, you're thinking where we are. Wait a second, we're not even close to neutral, and then we might go past neutral.
Right.
That's a Fed chairman. People better be listening, and they are listening.
They're listening, and then, the numbers that come out this morning, this is a 49-year low.
It's amazing, right?
Okay, it's a beautiful,
jobless claims,
it's
of course.
a beautiful thing,
It
no
is.
doubt.
That's right.
Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, every trading day right here, outstanding program, fast market. Kevin, Tom teach you strategies, option strategies, futures, future strategies. Bottom line, folks, great setup, great platform. The way you can test drive this platform, when you're at a website, just hit the banner, bring it up. You can open up that account. They allow you to trade with paper money. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Here we go, guys. Another day trading ahead of the payrolls number tomorrow. It's supposed to be a big one. So we're looking for something. There's a lot to go through. Obviously, the headline numbers will be non-farm payrolls and unemployment, but we'll be looking at wages. We'll be looking at labor force participation rate. We'll be looking for private sector jobs created. There's so much to look at in this that will really affect tomorrow's trading. This is my number one data point of the month. It's always a mover, if not in stocks, definitely in bonds.
Oh, baby. I'm telling you, huh, Kevin?
I wouldn't be betting against those numbers tomorrow, man. It just marches on.
Right. Well, it's amazing, and I'm sure you've seen this many times, Kevin. And what happens, folks, is this in the marketplace, right? The market, bottom line, fundamentally we can look at something and say, geez, the Fed's going up on rates, but the market, they just keep buying bonds. Well, what happens in the market is that they don't pay attention to it until they do, and then all of a sudden, like in a matter of 2 hours, right? It's like, okay, the market woke up that, hey, listen, man, we got a 12-cylinder Ferrari engine that's happening here inside the economy, and you're not going to be able to, have interest rates at these levels because then it can get blown out of the water.
We are going back to normalcy in terms of we are not at normalcy with these rates, as they kind of like have thought we are because it's been so long. But you heard Powell yesterday, man. We're not even close to neutral.
And not to mention, Tom and Tommy, that you've got an economy that has got lower corporate taxes, lower individual taxes, and a lot less regulation. So they have taken the handcuffs off of this economy, and you're starting to see what this thing can really do when it starts running. I mean, a lot of employers, biggest problem right now is finding bodies.
Yes.
Finding people to fill these jobs, and that's what's something that could really start, to talk about higher wages and then inflation. So I think that's what people are starting to come to grips with here. Higher wages are probably going to show up. Remember, last month ran a little hot in terms of the wage data. So we're looking at another number. And Tommy, to address what you were talking about, Jerome Powell spoke yesterday, and he was not close to deviating from his path of gradually lowering interest rates. And he said, Tom, and I'll quote him, the economy could stay strong for quite some time, effectively, indefinitely. So he's seeing stronger economic data points that he's seeing. So, this is a market that is off to the races.
Yeah, I agree. The march is on. Higher rates coming at us.
Yeah, and Kevin, I just put up the Fed Fund implied probabilities.
Yeah.
November is still a no-go, but December we're laying out at 69%. Let's say 70%.
72, right?
Yeah, 72.
Higher.
Yeah, I mean that's almost a given now.
I would agree.
Right. And the real question is going to be okay, in 2019, just how many are we going to have?
Right.
But hey, listen, as long as as long as wages crawl up a little, as long as inflation crawls up a little, what happens, folks, is that what is the real interest rate? What do you take the inflation rate versus what the rate is, and then this morning when I was coming in, the first thing I said to Tommy coming in, because I was all night long, all I was doing was mortgage rates, and I'm saying it's not as bad as you actually think, because per 100,000 on a 30-year mortgage, folks, a 1-point rise. Let's say we go from 4.75 to 5.75 is $674 a year. That's what it is. And you'd think that it would be a lot more than that, but that does make a difference. That's only on 100,000. So if you're buying a $500,000 house, that's $3,200, and so we'll see how that's going to affect the mortgage rates. Particularly, Kevin, you and I were used to higher rates, but Tommy has never seen higher rates. Right?
Yeah. Not my professional life, really.
Exactly right. And rates seem very high from a year and 2 years ago. But historically, and a lot of parents are probably having this discussions with their young adult children right now, rates have been a lot higher than this.
Right.
My first house was 14.5%.
There you go.
14.5%. Bottom line. But guess what? You still made money on it because inflation was running through the roof.
Right.
That's a different, and that, of course, that was 81. That was the peak of inflation and of rates, and from that point on, biggest bull market in the world, man.
Yeah.
And the real question is that bull over? Well, technically, it hasn't broken down yet. Fundamentally, it's like, okay, I don't think this is the closest that I've seen. This almost feels to me, Kevin, like, and this is probably, you were probably too young then too, but like 1981, we start running from 81 to 89 in a huge way, never mind the 90s. That's when I saw that younger people could really start making some money.
Sure.
You know what I mean? And I hope that that's the gauge we're in, because if it is, that means a lot of young people are going to make a lot of money now,
More money in your pocket. Eventually, the millennials are going to start buying houses.
No, absolutely.
They got to move out of their parents' house at some point. Sorry.
Kevin, you have a great one, safe one. We have a great weekend, man. Look forward to speaking to next Tuesday.
Always a pleasure, guys. Have a great day.
Thanks, Kevin.
Stay right there, folks. Tommy and I are coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now are down 188. You get the Nasdaq off 85. S&Ps are off 19.5. Let's take a look at this story. This chip story, folks, is pretty phenomenal.
It is, and let me just pull up because the headline I loved. Check out the headline at Bloomberg. That's quite a headline.
The big hack. How China used the tiny chip to infiltrate U.S. companies.
To infiltrate those companies, and to pull over the story on the Bloomberg because some of the headlines we were just going through it. So this is the full story, and it's a long one. Yeah. But you do want to check it out if you're out there because man, it is a heads up. So the highlight here: 2015. Amazon begins thinking about evaluating a startup called Elemental Technologies to potentially acquire them. Elemental made software for compressing massive video files, all right? You got Amazon Web Services, you have their Amazon Prime Video, the competitor Netflix, all right? That's what they're trying to bring them in for. So let's see. So they were so big, they helped stream the Olympic Games, this company, Elemental. And to dig down...
They communicate with the International Space Station.
I mean, it's all over the place. So we'll get down. They had national security contracts.
Funnel drone footage to the CIA.
Right. So, but they fit nicely into Amazon's government business, such as the highly secure cloud that Amazon Web Services was building for the CIA. So it seemed like a good fit. To do some due diligence, Amazon Web Services, which was overseeing the acquisition, the potential acquisition, they hired a third party to scrutinize Elemental's security. Okay? So the first pass uncovered troubling issues. Take a closer look at it. And it was about these servers that the customers installed in their networks to handle that video compression. Yeah. And those servers were assembled for Elemental by a company called Supermicro Computer, based in San Jose, commonly known as Supermicro, one of the world's biggest suppliers of server motherboards, fiberglass, all this stuff, right? So in late 2015, Elemental staff boxed up some of those servers, sent them to a third-party company to evaluate them, and when they did, they found tiny microchips the size of a grain of rice that weren't part of the board, but were on the motherboard of those computers. And immediately, I guess that was like, what is this, right? I mean, if you're, whoever they sent them to is probably, they're brilliant, right? That's what they do. They test these things. And I can't imagine that moment where those people are in that computer and go, what is this thing on this motherboard? Right. So Elemental servers are in Department of Defense, the drone operation, Navy warships, and Elemental was just one of hundreds of companies that Supermicro was supplying their servers
and so right
too.
away,
Yes, go on.
Amazon reported the
Yes,
discovery
thank you, yeah.
ASAP to the authorities, and through the intelligence community,
I mean,
they're
can you
shuttering.
imagine, right? I mean, you figure out that the company that's been giving you all the computers you're using is basically just a Chinese front to put their microchips in.
So during the next 3 years, a top secret probe.
It's still
let's
open.
see,
The chips allowed the attackers to create a stealth doorway into the network that included altering machines. Multiple people familiar with the invasion found that the chips had been inserted at factories. So that's where it's just supply side.
run by the manufacturing subcontractors in China.
Yeah.
This is pretty wild.
Yeah, and so it's much graver, as they put it, and much different than the software incidents that we're so familiar with, all of us. And it's much more difficult because you have to infiltrate a whole supply chain, and it's something really that only a nation state can really do, because you have to have full control over companies, over infiltrating them, and yeah, pretty remarkable. So, and you can see that's just the beginning of the story. I mean, lots of words in there, but check it out because it's just remarkable, and it's a brave new world, man. That's for sure.
Oh, that's cyber, spying is the whole ball of wax, because the reality is everything's on the computer.
It is.
We're running by computers. You can get on the computers. Guess what? You're all set.
And I think what one of the analysts, I was listening to Bloomberg earlier this morning, they were just saying that so many companies have their supply chains in China.
Oh, totally.
That this is like, I mean, can you imagine the board meetings going on today at many of the Fortune 500 companies?
They better have them going on.
And I'm sure they are, but I don't think they're going to have a solution immediately, which is the problem, right?
No. They get the CEOs. They're probably watching them right in their house.
Totally.
It's not,
Oh, totally.
forget it. Dave White's the right guy.
We'll get him on it.
I'm Mr. Dave White, man.
We'll get him on it.
And when you think about even 3 or 4 years ago, remember? I mean, you picture this, folks. He would come to the office. It's so freaking cool. I mean, he didn't want anything. He was telling us,
He's
right?
aware of the potential for that hacking, right?
Yeah, bottom line.
It's out there.
Natural gas.
It's Thursday, so we get EIA numbers for natural gas at 10:30. Quite a number for oil yesterday, right? 8 million barrel build almost. Oil shakes it off, trades above $76. So we get natural gas on Thursdays at 10:30. We're looking at the November contract on the Nadex platform. Quite a move already this morning.
7 cents already.
Quite a move. Right at 9:30, you got natural gas trading from essentially $3.25 all the way down to $3.18. We're sitting at about $3.19 right now. So we get the numbers in about 6.5 minutes from right now. We're going to check out some of the commodity spreads. We're going into natural gas. We're going to take a look at the 11 a.m.s first. Now, what's happened here is that we've gotten such a move. We've moved about 8 pennies, right? These got set because they open the 9 till 11 a.m.s.
Yes.
They open at approximately 9 a.m. They're going to get set at 9 a.m. with price parameters, and you can see that they were set when natural gas was trading about $3.25. So you have $3.25 to $3.45, you got $3.25 to $3.05, and then you have a middle one with $3.25 with 10 cents of exposure in either direction. Now you can trade these. It doesn't set up well for a volatility trade going in both directions, though. So let's jump around and take a look at the noons. Noons, you got a little bit different, okay? Because those are getting set. Now I say noons, those are the noons expirations. And those get set at 10 a.m. And what you can see is that by 10 a.m., we're sitting closer to $3.20.
Yes.
So now you have the contracts that go from $3.20 to $3.40.
Much better.
$3.20 to $3, right? So we're sitting at $3.19.12. We'll take a look. Here's our bullish spread, which would be $3.20 to $3.40. Could be buying this. We're slightly out of the money here because we're not quite within the range of $3.20. So that's going to be all premium. And then on the flip side, you got your negative spread with 20 cents of exposure to the bearish side. Now in this contract, we're going to have 8 ticks of intrinsic value in there. So there's your difference. You got $8 in premium in each contract. On the bearish side, you're paying for that intrinsic value. So you're looking at about $24 or 2.4 pennies that you need away from that $3.20 price point. And you have a little bit of a head start to the downside. So if you're a little bit bearish, you got a head start. Not bad. And to jump for the final one, let's see how the dailies line up. Now you got the 8 till 2:30s, which is nice. Same exact price point. This time, you have instead of $3.20 to $3.40, you got $3.20 to $3.60. 40 cents, not probably likely, but it doesn't hurt because you're getting charged very little premium for that extra 20 cents. What you are getting charged for is the extra 2.5 hours, though. All right, so on the bullish side, instead of paying 8, you're now paying 14, right? Excuse me, where was I going? That jumped around. Okay, I'm not even going to, that was a bad. But so instead of paying 8, you're paying 14. And then on the bearish side, you again have 40 cents of exposure. but the real deal is that you have an extra 2.5 hours, and so you're paying 23 on the downside. And again, you have some intrinsic value in there. So yeah, you're looking at about 37, and that's again about 3.7 pennies away from 320. You got till 2:30, so that's where you'd want to make that decision. You want to pay for noon for like 2.5 pennies, or you want to go 3.5 to 4 pennies to pay for 2:30.
And that's not bad, really, because the contract's already moved 7 pennies this morning.
You're getting some action.
So there's volatility there.
You're definitely getting some action. And to put it on a daily real quick, just to see, well, I'll put it on an hourly even to see. I mean, quite a run up, right?
Look at that. Just come back to the strength from yesterday.
Just going back to Monday, October 1st, we were sitting at about 305. We run up to all the way 325. We're back to about 318. And we get those numbers at 10:30 when we come back.
Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Come right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 228. You get the Nasdaq off 104. S&P's down 22. You get that choo-choo train steaming. Downtown, folks. Natural gas. What do we got with natural gas?
Okay, so inventory is rising 98 billion cubic feet. Expectation was a rise of about 87, so a little bit more natural gas than we were looking for. And as you would expect, there's our drop, and quite a number off the bat. So we were trading at give or take, call it 320, right?
Yes.
Those are the spreads we were looking at. We had a little bit of a head start to the downside, and these are 5-minute bars. I just want to make sure. No, that's an hourly. Check out the 5-minute when you put it. There we go. So quite a drop as we were sitting at about 319 above, and now let me get up the price. We're sitting at about 313. We just got like a 6-penny drop.
Huge.
And to recap,
and the most we needed was 3.7.
3.5, yeah,
on
to 4 pennies
230s.
for the dailies.
All right.
So here were your dailies. This would have been your bearish spread. That's where all your value would be right now. If you wanted to buy that back, you buy it back for 63. That was going to cost us about 37.
Right.
And again, if you ever got a pop, not sure you would on that type of action, but you'd have exposure to the upside still above 320 all the way till 230. But quite a number as natural gas. I mean, you back this off. We just traded from 325 now down to 314. You're talking about 10 pennies in the span of exactly an hour from 9:30.
That's $1,000 per contract.
In the future, sure.
Yeah,
quite a number, man. So we'll check back in, but natural gas along with oil, both those markets rocking with some volatility this week.
Huge.
Definitely.
877-927-6648. And if you want to take a look at this NASDAQ, folks, NDX 100 is getting smoked here. So let's see if I put, what did I just have this? Hold on. I want to put it, oh, there it is. Okay, right in there. How do I do this? Okay, 1 second. That's interesting. NDX I want to put in there. That's what I want.
Yeah, I know you just had it.
That's so crazy, I know. Okay, so let's just take a look at it. So, in the higher volume equities, okay, we got Advanced Micro down 38. Apple's off 255.
Big number.
You get Facebook down 250. Netflix isn't in here, though. This is interesting because Netflix is down big. Well, I got to figure that out.
Okay, and that was the most volume that we were looking at.
Yeah.
So, Netflix, of course, a big price stock, down $10, but
Amazon, they're all getting hit. That's down $29. It's going to go after swing low out here of 1865. Right now you're at 1935. We get an expansion here, man.
Definitely.
That's the bottom line, and we'll see whether we get that expansion on price. Now, what's really different is that gold is going up. So this is going to be intriguing in watching this because this is divergence if you looked at this as in a fundamental view, because picture you have notes and bonds that are still going up on yield, yet the dollar can't hold price. That's going down and gold's going up. Because the theory is that if rates go up, bottom line is that makes that dollar worth more money.
Sure.
Well, guess what? Not today.
Yeah.
And what we do have inside the gold market now, what's going to get intriguing here is that I would rather that we're going after this on a Tuesday or Wednesday. What's going to end up happening probably is that we're going to go after the 218 to 220 probably tomorrow, which on Fridays is like, okay, meaning specifically, folks, what happens is that the metals market on Friday can get highly volatile. Now, we've been on an uptrend, which is good. When you're on a downtrend, you're going into a Friday, they can kill it.
Sure.
And just kill it.
Yeah.
But it looks to me like we're going to go for it again. And from 1218 to 1220, that's been a tough take, man. We get up there, what is that? That's the 28th and the 27th of August. We get up there again on the 13th of September. We get up there again almost on the 21st.
Can we take a look at the VIX real quick? I'm just curious where we're at in the VIX as we got a little bit of negative action
here. I bet
here.
that baby went up quick. 1337.
Yeah, it is up. I mean, it seems low, but we were at 11. That's yesterday.
Yeah.
We're quite a number as this market marched on, and percentage-wise, quite a pop.
Yeah, and this is what the difference is, I would say, today, is that we're at the beginning of the day here.
Yes.
What we have had, the way this market is basically traded for 2 or 3 weeks now, the Dow has continued higher. But the S&P, we'll put this up so you can see, the S&P hasn't been able to hold price. And it's kind of, well, yeah, there you go. What day is that?
That's August 29th.
Yeah,
it's more than a month ago.
And what you're going to do out here today, you got 18 million shares already. We basically did 64 million. You're going to do monster volume here. You're going to break. You already broke the 289. Oh no, So look at that. We haven't broke 289.41, but we'll do more than 80 million shares. That's the low that was established out here on the 26th. So it's going to be quite a day out here. And we'll see whether it's, you know, just this bond market that's pushing this baby around. What happened? It's all red.
I don't know what happened, man. It happened pretty quick, whatever happened.
Let's go over and take a look. Let's take a look at the, actually, let's take a look at the oil market.
Sure,
Because oil yesterday was pretty incredible. It just rejected lower price like ASAP.
Yeah.
And
so
guess
just
what?
under 8 million barrels build. Expectation was around 1.5 million barrel build. So much more oil than they expected.
And it's not backing off.
No.
You know, this oil is not backing off, folks. I mean, the danger here in the oil market is the thing wants to go to 90 bucks. I know it sounds insane, but guess what?
And where do you get that out of?
Watch, when we put this up, you're going to see, and it's how fast we came down in 2014, that once we launched, you know, this level that we got at, it's like, okay, you know, bottom line is that you can see, and in 2014, we went from $107 in June, and then in January we were at 43. Now where I'm getting the 90, I'm saying that, you know, you're already into these bars here at 75. There's a lows of consolidation, and the low of this not that we got is 90 bucks. It's like, okay, I know it sounds insane, but you know what? It's like, hey, when there's not a floor there that, you know, basically is resistance.
No, we're right in the middle.
You know, and
Yes.
That's pretty intense. You know, when you take a look at the gasoline, excuse me, folks, the gasoline and the heating oil, they're set up the same way. You know, the heating oil looks like it's already gone, meaning gone topside.
Sure.
I mean, it's much closer to the lows of those highs that were out there.
I just took one quick peek back at natural gas, 360 and 59, so pulling back a little bit up to those. We're about 320, but still holding lower territory.
Yeah, let's go over to heating oil for a second so I can show you the heating oil too, because the heating oil, we have a lot of listeners up in the Northeast, and this is important because this is our pocketbook in a big way coming into the winter. Regardless of we just looked at the news in the natural gas market is that Boston's going to be, what did it say, 68 or 78?
74. It's definitely in the 70s. We'll pull it up. 14 degrees above the normal would be the high potential use today or tomorrow.
You know, so they're not going to be using any gas then.
No. You have to turn on those air conditioners.
You can see we're 242 wholesale in the heating oil.
Yes.
And you can see 282s that, you know, the lows are, let's say, even 272s, the lows that high. It's like, okay, man, you know, that is monster money, man. I don't even, you know.
Big swings in those commodity markets.
Huge.
Yeah.
Absolutely
oil,
huge.
Heating oil, definitely.
Dollar index, let's go take a look at the dollar index. So here is the divergence, too. There's no doubt that dollar index couldn't handle higher price. You know, it would have to get back inside 94.765 really to be in the lower range. But, you know, there's big divergence, no doubt about that. 877-927-6648. Stay right there, folks. Got our man
Jack Gleason coming back.
Coming up. Major League Trading.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials right now down 230. You get the Nasdaq off 110, S&P's off 24. Let's go over to our man, Mr. Jack Gleason from Major League Trading, as we do each and every Thursday at 40 past the hour. Don't forget, folks, you can check out Jack every trading day, MajorLeagueTrading.com. Jack Gleason, what's going on, brother?
What's going on, guys? Woof, we came in on a hot day here, down 25 in the ES. We are rocking and rolling. Coming off that reversal, was there a headline towards the end of the close? I personally didn't see one, so I guess we're just selling off on some technicals.
Yeah, you know what is intriguing at the close yesterday, folks, and Jack, is that we had a flat market, but when you actually look at the Dow, the S&Ps, and the Nasdaq, someone loaded up. We had big volume yesterday, man, which is really unusual. I mean, they threw in another few billion, in the Nasdaq composite. Why? I mean, we did over 3 billion shares in the composite, and it's like, okay, man, I had to look at it twice last night.
Big
it's
number,
like
definitely.
3 billion.
Yeah.
Okay, and you're talking about 3 billion without option expiration. So someone at the close said, you know what, man, I'm out of here.
And they picked up this morning where they left off.
They picked up, man. They picked up.
Yeah, I guess it wasn't an impulse decision then. Maybe they're continuing here. But yeah, so we're at a pretty important level here. I shot you over 2 charts, for me at least.
We got them up. You want to start with the S&Ps, Jack?
Yeah, we'll start with the S&P. So I've kind of been waiting on this for quite some time. Actually, last week, so we had rollover from the September to the December contract. But basically, it's the low from the 7th of September to high in the December contract, December only, was 26.08 half, which is where we found our low last Wednesday, Thursday, and Friday.
Okay.
But I wanted to see the continuous trade 29.06, which is just that same September 7th low to the high, so it's just divided by 2. So we've just done that. I've been waiting for this for a while. I actually got shorted in the open, covered down there, and then I'm looking to go long right now. So 29.06 here is a pretty significant level. Now, if this doesn't hold, we got 10 points below us, and that could possibly be today. But what I would like to see, I mean, if you look at this market, it's quite a range here. We're right at the bottom of this range. This is where people get overly bearish. We take out a multi-day low by a few ticks, just enough to stop longs and trap shorts. And if we can't continue to hold below the lows of last week, Wednesday, Thursday, Friday, we're going to see a short covering rally here into the end of the day that's going to lead us up into the 29.18, 29.20, possibly above, but that would be my first initial target I would see us going towards the end of the day. We'll see. We're getting a little bit of a bid. We're up 3 points off that level, but watch that level stick here, guys. If we start creeping below it, look for a move down down to 28.96. And then 28.80 half below that in case that trades between now and when I talk to you guys next week. So levels below 28.96, then 28.80 half, holding 29.06. We're going to move back up into 29.19 here today or tomorrow.
Yeah, we said it's early in the day too, Jack, right? I mean, we're doing this starting off the show at 10 o'clock as the markets were starting to rock to the downside, and we got a lot of trading left today. We'll see where those S&Ps and the NASDAQ and everything, yeah.
Now, Jack,
Yeah, and I mean,
go ahead.
we already hit the 10-day ATR on the range here today. So it's like, are we really going to go that much lower?
That's what's
No
interesting,
headlines, no headlines, no news.
Sure.
I don't, so that's something you always got to keep in mind. What's the average move? All right, we're at it. We're at support.
Yeah.
What's the bet here? Reversion to the mean or another push lower outside of the, average true range? So.
Nice. Now, oil. Let's go to the oil market.
Alrighty.
Talk about some volatility.
Yeah.
Yeah. Oh my
They
goodness.
come out with numbers yesterday. They are monster numbers. Oil looks downtown for about 30 seconds and then says, "See, you don't want to be a man."
Seriously.
Oh man, I wish I was on here yesterday. I had some pretty spot-on levels. Basically, so this same draw I have up here currently, which is a high-to-high sequence. I've explained to you guys that before. We're pulling from last Tuesday's high, and you guys can do this when you get off air on your own time, because I don't have active drawing on this. But basically, that same high to Tuesday's high went right to its 50% retracement yesterday on the news. So he shot down, filled those orders, and then ripped to the sky and completed the profit target. So today I'm looking for what I would call a same anchor new high sequence, looking at levels at both the 38% retracement of the prior Tuesday's high to high. So it'd be a 38% retracement pullback, and the 50% is going to be 74.84. So my levels there is 75.33 and 74.84, and I think those are going to hold. I mean, you can even see that 74.84 lines up with that lower, basically the close and open of the body of all of the action yesterday, right before the that oil inventory report. So that's a pretty significant level. If we crack below that 61.8, which would basically be taking out Wednesday's low on the oil inventory report, that would change the higher time frame trend. And then also 76.62 is a level. You have that up on my screen as well.
Yes.
You go to a weekly chart, which is pretty interesting. That level is like basically I call it a leg start down. It's the beginning of a major move. I have to pull it up on my chart. It's the beginning of a major move in oil. When we had, what was that, 2013? I mean, it was like basically, or 2014.
Went to 100. Yeah, 110. Yeah, right.
So that is a significant resistance level. I'm going to be watching that 76.62. I think it'll be hard for that to break. I mean, we're going back multiple years now to hit these levels.
Right, because 75 is the lows of 2011, and then you got 105 up there at 2014. So I mean, if we break this top side, right? I mean, it's game, right? I mean,
So now I got it pulled up now. So we had the last time this price traded, the open of this week, that 76.62 was the open of the week of 11/24 of 2013. It was an $11.33 move lower. So that was basically, this is the open of that week. That was pretty much the largest week down, the largest move down in that entire move. So that's why that level is pretty important to me.
No, totally. Hey, can we go back to the S&P for a second? Because, you just brought up the 38% retracement there. So picture that intraday out here, we do a 38% move of the move that we just did down. Then what you be looking for then?
Okay, so basically my sequence here in the S&P, and let me just double check my chart. So you'll see a draw that's just, obviously towards the right. It's more of an intraday draw. It's a little harder to see.
We've zoomed in on it. I think we got it. Perfect.
Yeah, we have it.
Okay. Yeah, so that 38% retracement where I have marked up on that box, that's a same anchor new low extension. That's actually what we had held this morning. That sequence held, completed our profit targets. If we trade back to that 28.19, fail from that level, you're going to be looking for a move basically down to 28.96. So that will be like, if we rally up there, I'll look on a first test.
29.18, perfect. Right. No, that makes sense.
Right.
So, I mean, and then that's the low of Tuesday too. So it lines up nicely. It's It's also where the rally began last Friday. So, I mean, anytime, these fibs line up when it just looks good on a chart, it lines up with the low, lines up with the, I call them leg starts. There's the areas we begin rallies or sell-offs. To me, that's trade location all day. So we could go up there.
Isn't it weird that I know it blows my mind when if you do the fib numbers, then all of a sudden you get swing points at the price projection. It's like, how does this work, right? It's like it's crazy.
Magic, man, magic.
Magic.
Magic
with numbers.
So our man, Mr. Jack Leeson. It's our man, Mr. Jack Leeson, folks. MajorLeagueTrading.com. Check it out. Jack, thanks so much, man. Have a great week, safe week. Look forward to speaking to you next week.
You're welcome. Hey guys, take care.
You too. Thanks, Jack.
Stay right there, folks. Tommy and I come right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now down 217. Nasdaq is off 99. S&Ps are off 21. You got a double banger inside natural gas here.
Natural gas, much like oil yesterday.
Oh, my God.
Shaking it off, man. Shaking off the extra build. And we spiked down from about, we're at 319.19, so just under 320. We spike all the way to 312.99, all right? So call it 313.
Yep.
And we're now almost 6 pennies above that level, approaching 319. So what's interesting here is that we had looked at the potential trades with exposure on both sides.
That's right.
We had looked at and said that, you know, you could have sold out your position immediately. You get that
Got
type of move
67
if you
cents.
wanted to, right? So that would have been your bearish trade that you would closed out. Maybe
Yep.
you got $67, which represents the 67 cents that you're kind of below, excuse me, it's 6.7 pennies
Yeah.
away from that level. And then you'd have your bullish spread still open. Now, what's interesting here is that bullish spread goes from 320 to 360, right? But you don't need to get above that to have value, because right now there's value in that spread because the time is the value, which you own, okay, if you had that. So if you were selling that out, you could sell it right now for $6. Doesn't seem like much, except that you had taken off so much off the table. You're only putting up $37 combined.
Right.
You take off 60, whatever it is, dollars, right? And then you have 6. And the point being, you don't need to go all the way above 320 to gain value if you get it that quickly, because we have in this contract 3.5 hours still of exposure.
Right.
Which that is some premium that's
Pretty
worth paying
amazing.
for, right? It is amazing, and we'll see. But quite a market, man. These commodities, doesn't matter what happens on those EIAs. Like I said, what would have happened if we missed to the other side? You know, what if it was a draw?
I know.
Because both markets, oil and natural gas, seem like shaking it off, man.
It seems like energy in general is going to get more expensive. Well, it is more expensive already.
Definitely.
Stay right there, folks. We got a fast market coming up next, and then of course we're going to go to our man Basil Chapman, Steve Rhodes. Stay white. Be back this afternoon. Thanks, pal.
Thanks, man.
Wow, go get him, folks. Hold on for the ride.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.